And so private equity funds today are focusing on consolidation as a big theme in mid-market IT services companies. So, so what Jayant mentioned in terms of the Keen Carator transaction is a classic example of that, where you know, using a company which was about 130, 140 million dollars in revenues, you acquired something which was probably 850, 900 million, sorry, about 950 million dollars of revenues. So with that, you know, you have created a company which, if you were to look at the Indian landscape, would probably figure in the top, the fifth or the sixth largest company in the country. So I think the opportunity there is value creation by consolidation. The other themes which are becoming important for private equity funds in mid-market IT services companies are essentially pertaining to companies which have specific technologies or products. So this market saw only services business models, but lately there are companies at the mid-market which have redefined the product landscape, and there are companies like Subex, Geodesic, and we came out with a report last year talking about some of these companies and how they were differentiating. And if you were to just look at how these companies have created value in the last 3 to 4 years, the numbers are just astounding. The other areas where people are differentiating themselves and hence private equity investments are going in are mid-market companies which are trying to establish themselves in certain domains. You know, companies which are focusing on domains like telecoms, which is an area where you can actually create some scale. There are companies which are going in today and are doing transformational M&A, from being 100 million, 150 million dollar companies to acquiring the larger plays. So that is a scale game in mid-market companies. And the last theme is that of geographies, where companies are differentiating themselves by going into geographies which have been very difficult to crack. And these include companies which are focused on, for instance, the Japanese market or the continental Europe market. You know, continental Europe is the theme for a lot of our research this year, and we are seeing a fair amount of business coming in from continental Europe for IT services companies. So there is an immediate, you know, I would say value creation opportunity the private equity funds are seeing in companies which have been traditionally focused on the faster growing European market. I think this is where we have you know, mid-market companies and how private equity funds are investing. Just in terms of the sizes, I think we saw deals worth about $1.3 billion between IT services and BPO companies in 2005, and more like $2 billion in 2006. And I can only tell you that this number is going to grow at a 100% plus clip in the next 2 to 3 years as companies redefine the landscape. And I think there are, in this manner, a lot of opportunities which private equity funds can participate in. One of the deals which we were involved in, which was again similar in nature but very transformational, was the deal where a company called Transworks, which is an Aditya Birla Group company, acquired one of the largest BPO firms in Canada called Minax. And that was again transformational because it just enabled the company to get in from being, you know, number 15th or number 12th on the circuit to the top 5 BPO companies in India. And there was an interesting private equity participation there, where a regional fund from Canada actually participated in the acquisition of this firm. Lastly, you know, when you look at distribution base and how it has changed, I think there has been a significant change in the investor base, which we saw. And I think there we are seeing a lot more funds on the private equity side and the buyout side, you know, which have entered the market. And then there is always this concept of having hedge funds, you know, which have also come into the territory of private equity funds. So as opposed to 10 to 12, you know, investors which we saw in this market maybe in 2000, we have more than 60 to 70 eligible funds today which are looking at such opportunities. That's all. Thank you.
Thanks. Thanks, Anu. Julio, may we ask you for some of your perspectives?
Definitely. Thank you. I want to thank everybody for the time here. First of all, I'm with Goldman Sachs. It's a global investment bank based out of New York. We recently opened operations here in Mumbai to actually collect assets and trade and execute and hopefully make some money as well. We also have an operation in Bangalore, which is our captive BPO, so we're in this, both from sort of an internal perspective as well as actually chasing the revenue opportunity in the market. I'm within Goldman Sachs. I'm in the Global Investment Research Group, which focuses on equity research of public companies, obviously. And in that role, I help track, cover IT services companies, both in the United States and in India. And this, for me, has been a very exciting opportunity that, quite honestly, I was very lucky to sort of landed on my lap back in 2002, 2003, when we were asked to participate and lead the Infosys ADR placement, the first one that they did following the 99 IPO. And since then, we've been fully integrated in terms of coverage. So on the U.S. side, my coverage includes Accenture, EDS, CSC, IBM Services. And on the Indian IT services side, I do now cover pretty much all of the large tier 1 companies, including TCS, Infosys, Wipro, Satin, pretty much all of the top guys. And so as we kind of look forward here, we're looking to continue coverage of the U.S. guys as long as they exist. I was just laughing about how I just lost Keen from my coverage list. So my choice when I go home is going to be to figure out who I replace it with. So do I go with a U.S. company or do I go with an Indian company? I think the obvious is going to be pretty choice. The choice is going to be pretty obvious. So with that, I wanted to just kind of give you a couple of statistics as it relates to what we've seen so far. And the numbers are pretty staggering. I'm sure there's not going to be any real surprises in this data, but I think it's worth emphasizing in terms of where we are as far as performance is concerned. Tracking this data from 2001 to the end of 2006, during this period, post the bubble, we saw the technology stocks in the United States return about 5%. During that same period, if you were to look at the IT services stocks in the United States, the return was actually negative, about 1%. This is over a 5-year period. The highest performing technology sectors were basically the internet sector, which was up about 96%, and the hardware sector, which was up about 64%. Relative to that, when you look at the offshore space, specifically covering the Indian IT companies, the return was 270%. So there's no doubt that there's been a tremendous shift as far as IT dollars are concerned, and what that's actually led to is a stark change in the market capitalization of the U.S. companies versus the Indian IT services companies. Looking back at 2001, the U.S. IT companies had roughly a $92 billion market capitalization, and this includes basically just the companies in my coverage list, so Accenture, Bearing Point, CSC, EDS, and a couple of other small cap names. Looking at the names on the India side during that time, Cognizant, Infosys, Patni, Satya, and Wipro, the guys who were actually public during that time, but throwing those guys into the mix, the market cap at that point in time was about $19 billion. So $19 billion versus $92 billion. Looking forward to 2006, at the end of 2006, the market cap of the U.S. companies had actually shrunk to about $81 billion. And the market cap of the Indian IT services companies had expanded to about $73 billion. So the shift in appetite from the U.S. investor is pretty clear, at least within the IT services side. And I think when you look across the landscape of broader technology investing, there are really not too many areas where you're going to find the kind of growth that you can find here in India and within the IT services sector. And this is a pretty big statement because if you look at hardware, software, interns, so when we look at it from that perspective, that nuance, I think, supports the growth that we've seen in terms of market capitalization as well as the absolute growth profile of the space itself. So where does that actually put us in terms of valuation? And I wanted to just kind of give you a sense on the numbers themselves. Since we've started looking at this right now, when you look at the major market performance and valuation, especially most recently, the trailing 12-month performance of the Sensex is about 45%.